Here is an easy order block trading strategy that you can implement on your next trade. This will be very simple to implement if you're brand new to smart money concepts. The first thing you want to do is identify areas of liquidity that can be old highs or old lows. In this case, I see this swing high here that I will mark out. Now we are on the 1 minute chart, so this is a great scalping model to get in and out of trades and not to be subjugated to just one bias, right? So regardless of what the higher time frame bias, when you're on the 1 minute chart, you'll be able to find long and short opportunities regardless of what's going on the higher time frame. That's not to discredit what's going on the higher time frames. This is just a scalping model that you can easily implement and get in and out of the market very simply. So the first thing that I see here is that swing high being taken out. Now, as that swing high is being taken out, I am looking for the bearish order block, which I found right here. And what I'm doing is I'm going to wait until price returns to that area, and I'm going to enter my trade, and I'm going to take it long. Now, this trade here in particular, if I were to take this trade right at the opening of that order block, that body of the order block, I would put my stop loss right below it for about a 3 pip stop loss. Okay. And, because I want to be in and out, we'll get in and out for like 10 pips. Right. And so here's a 10 pip trade. Very simple. This was a 1-to-3 risk to reward ratio. Now, if you are practicing proper risk management, it doesn't really matter about the pip size. It just matters, what's your risk and the size that you're putting into the market. And like I said, this is in and out, tight stop loss. Now you can actually, get your stop loss even tighter, but price action could get a little wonky. So you want to be safe. I think a 3 pip stop loss is more than fair or good enough. And now, granted, also I'll show you liquidity voids or imbalances, how you can actually if you don't see an order block, the next line of defense you want to look for is an imbalance, right? And so you're looking for these liquidity voids, and you're looking for an imbalance in price. So right here, there was a little small imbalance that happened right here, but nothing worth my while. But I noticed this area right here where the close of that candle and then the high of this candle left this imbalance right here, this shaded area that I'll shade in. So it left this imbalance. So price, now as you're getting out of this trade, now this is a hyper scalping model where you're taking longs and shorts simultaneously. You're buying up, and I would recommend keeping a small pip amount, like a 10 pip, even 5 pip amount, to get in and out. And this is how you can take high probability setups, but take a more volume approach. And there's more than one way to skin a cat, but this is just a quick scalping model that I'm just showing you. So now if you don't see an order block, and you know that you're out of your position, and you also know that price wants to drive lower because you've done your higher time frame analysis, in that imbalance, you can take an entry right here. Now, granted, it doesn't get all the way up into this low, right? So a way to find an entry is to use your fib tool. So you want to measure from there to this high, and you want to mark out the 50 level of that imbalance, okay? And that 50 level of this imbalance is like right at 105.285, okay? So you get that 50 level, and that's where you would enter on an imbalance, okay? You can the imbalance doesn't have to be filled in all the way. So I tend to like to take the 50 level of the imbalance, and you'll still get a good type stop loss. Let me take off that magnet. So if you entered like right there, and I would put, just put my stop loss once again a little bit above there, 2-pip stop loss, tight pip stop loss. You want to go for 10 pips. Boom, go for 10 pips. You get about 1 to 5 risk to reward ratio right there. Okay, 1 to 5 risk to reward ratio just off of that trade right there, just trading into the imbalance. All right, now granted, obviously it went lower, but you're not trying to be greedy. You just want to get in and out, right? In and out, get a good risk to reward ratio. This style of trading will give you anywhere from 1 to 2 up to 1 to 5 most of the time. Okay, because we're operating on a 1 minute time frame, we'll be able to get those 2-pip, 3-pip, even 1-pip stop losses. So you can put size in, get size out. So, but the risk management portion is a topic of another discussion. I just want to show you the technical side of things. So as we see, this is the second trade. So we've taken two trades already. Okay, and this is all within a matter of 30 minutes. So now what I see, as price, we have this structure form. Okay, we have this little structure form right here. So you got this high, this low, this high, this low. Okay, we have a little structure for it, little W pattern, right? Or this also can be considered a head and shoulders pattern, right? So as I'm seeing this pattern form, my eyes, I want to see this structure broken in order for us to continue to the downside. I would like to see this structure broken and then a return back into the order block that was left here, right? So first thing we want to do is, I'm looking at this area. I would actually like to see, so as this structure here, I would like to see that we get a break in market structure. Okay, so we get a break. We do get that break in market structure. Get a break in market structure. We actually get very close to a pivot point as well. Hit that break in market structure, and then we have another order block right there. Got another order block, and we got another entry. We'll put the stop loss right above that order block right there. It's about a 3-pip. You can probably make that like a 3-pip stop loss. Make that about 3-pip stop loss. Target for 10 pips or so. Get another 1 to 3. Very easy. Okay. Now within that, there's also another opportunity, but it doesn't break the structure, because one thing you want to do is you want to wait for a break. You either want to wait for a break in structure or some type of liquidity grab. This here I would consider a liquidity grab, not necessarily a break in structure, because price had been trending up on this 1 minute time frame. So that is a simple way of being able to trade order blocks. So if you've been confused, like, okay, how do I trade order blocks? I recommend getting on the 1 minute chart. Okay, go back test this yourself, forward test this, practice this in a live setting. Not necessarily, I'm not recommending you take trades in a live setting, but in any measure, but on your demo account in a live setting is what I mean. Practice this and get accustomed to, getting in and out of trades. And major pairs like Euro USD, GBP USD offer up these type of setups every single day, no matter if we're in a consolidation period, whether we're trending bullish or bearish, no matter what the fundamental analysis is in the background. You'll be able to come into the market and scalp the market for 10 pips, getting 1 to 3, 1 to 5 setups very consistently. Okay, so if you're in FTMO, or if you're trying to compound account or grow a small account, I think this will be for you. And now, before we get out of here, so price continued to crash down, obviously, but like, you wanted to meet those rules of breaking structure. Okay, that's one thing I don't want to leave out. Okay, you want to. So here is a setup. So right here, I see that liquidity grab, and then I see a breaking structure. I see that grab, that breaking structure. I mean, you can catch these trades as well. The choice is yours, but I would prefer to see that breaking structure. Okay, and then me personally would have liked to take this trade here, but price never came back into that area. This one could be considered as well. This one could have been considered. But yeah, these opportunities happen all the time. So just get into your charts and just get used to seeing, those breaking structures, and just wait for price to return to those areas. Now, granted, they fail. It's not 100% foolproof, but this is a very good way to, even if you fail on 3 trades, there's the probabilities of you executing and having a high probable setup on the next 3 trades is highly likely. So definitely implement this on a 1-minute chart. If you have any questions, drop them in the comment section below. Till next time, talk soon.